All right, welcome to the Cam and Joe podcast. This episode, we have our first guest, actually. Super excited to introduce you all to Matt. Matt Martyn, how are you today, sir?
I'm doing well, Joe. Cam, doing really well. I can't complain.
I love it. Cam, how are you today, buddy?
I'm good, man. It's good to get together. And Matt, I really appreciate you coming on.
Oh, my pleasure,
Excited to
guys.
pick your brain.
Yeah, I was talking to Cameron about because what your kind of like your ideologies and your interests, Matt, are like really on par with the stuff that we talk about. So I know that we were both super excited. So I don't know, where should we jump off? I know it's like we could do like latest news. We could do, yeah, there is a lot to talk about. Let's start with FTX. So we were talking about how you could kind of like got me interested in crypto. I dabbled into Gemini. I know you had money in Gemini, and then all of a sudden, like the crypto world exploded. Like, what are your thoughts on all that?
Oh man, well, FTX is a long story, right? It actually goes back, like the problems that FTX is having right now has a lot to do with issues that happened 6 months ago. Joe, you had mentioned before we started recording that you got blown up a little bit by Luna.
Yep.
Right. And so that was kind of a Ponzi-ish type reward program. They were giving out 20% APY on stable coins backed by basically nothing, by the strength of the network, so to speak. And so they started to have a run on the bank type situation. And when they had that run on the bank, not everybody could get out. Like with a lot of markets, you're fighting at the exit door. And so major counterparties like Jump Capital, Multicoin were all part of that. Folks that are managing billions of dollars, right? And so that whole blew up a hedge fund called 3AC. 3AC, two guys, this Suzu personality, and all these personalities. It's like the whole narrative is live on Twitter. So CT or crypto Twitter is where you can see all this stuff, right, unfold.
But dude, like, and it's like everyone was not asking questions. Like,
no.
the return, just to give Terra as an example, I think at one point I had like a 120 APY return. I don't know if I got that, but I was like, cool, yeah. I was like, don't ask questions, just get the money.
Yeah.
And I think there was it was just a freaking blanket of people doing that.
At all. Right. And, they just thought they could time the exit better and get out in time, right? And they didn't, right? And a lot of people thought this 3AC company were like super great traders and things. They were just omega bullish, over leveraged through the gills. And when they blew up, when Terra Luna blew up, they blew up as well. And it came out about 6 weeks later. And that had this contagion effect on all of these other borrowers and all these other active projects across crypto, because they would say you were funded by 3AC Capital for some kind of project, whether it was a goofy NFT that was launching or you're doing some derivatives trading on the blockchain, whatever. They would offer you like 8% APY if you let them manage their treasury. And so they were taking all of those project treasuries and trading with those, and they lost all of it too. So that's where you had all these altcoin market caps fall away. And during this time, SBF, Sam Bankman-Fried of FTX, his sister company, Alameda Research, which was actually the original, their hedge fund, right? They started, unbeknownst to everybody that we knew at the time, they started bailing out some of these core projects, right, with customer funds from FTX, which is a huge no-no, right? And that's huge no-no. And that's something that wasn't covered in some of these puff pieces at first. They talked like it was a bank run. It was just a lot of speculative failure. No, it's right in FTX's terms of service that customers retain title to their funds. And so the moment they took those funds and traded with them, right, they broke the law. They committed fraud.
It literally became a Ponzi scheme at that point.
Yeah, 100% fraud. No, like
Total
this
fraud.
was an accident. what they were doing.
Nothing. And
they just thought
somehow
that they could recover it like Enron style, and then like.
Well, and Enron is the guy who's running it right now. Do you know that?
He's the guy doing the guy who did the Enron bankruptcy like sell off or whatever. Yeah, he's doing that.
Yeah. And his quote on CT was like that this is the worst that he's ever seen.
Yeah, he's never seen anything like this.
What a mess. Yeah, I heard he said they had no board meetings.
No board.
Yeah. No board. Oh,
it was like three people were basically the entire company.
No
and then
firewall,
how do you have a company like that?
Slush fund, all of it.
And then it was established in the Bahamas. Is that normal for that space? So would that not raise any eyebrows?
Allegedly, we don't know where all the money really originally came from, but SBF allegedly was doing something called the kimchi trade, and I may have that wrong, but he was arbitraging early, like 2017. He was arbitraging Bitcoin from U.S. exchanges to foreign exchanges, and eventually Chinese exchanges and Japanese exchanges. So he went up with his partner in Hong Kong, and then they ended up down in Bahamas a little bit later on after they continued to grow.
This is the like FTX kind of origin story, essentially.
Yeah. So SBF, Sam Bankman-Fried, was making hand over fist 20-30% margin trading Bitcoin from one exchange to another because there was mispricing, right? So he would
How do you do that? So he was just taking advantage of the
early
differentials?
Yeah, it was so early in the market. There wasn't the same automation. Folks didn't even know that these exchanges existed in these other countries per se, right? And so Bitcoin would be $1,000 one day at a U.S. exchange, but he could buy it there, and then he could sell it. And it would take some time to get in and out, but within 24 hours, he could turn around and sell it for $1,200 a coin, right? Make a 20% profit, right?
Oh, how do you dude? Like that's the shit I want to find. Like, how do people find those? Like what you were talking about? Those are they called those stink bets, where you can like grab prices super low and then they pop back up.
Oh, a stink bid. That's just a limit order, right, on an exchange. So if there's a low liquidity pairing on an exchange, whether it's a centralized exchange or a DEX, if you put a stink bid or just something that's way lower, maybe there could be a whale that's manipulating prices, trying to push down a price by selling, trying to cause a liquidation cascade, going after people's stops. Sometimes you can have a freak wick in an exchange. And so when that happens, if you can get lucky and your bid can
just goes like boop boop, and then you get a bunch of money.
Yeah,
essentially.
like super high frequency trading. So folks will do this on stable coins, right? They'll put a stink bid on. Well, here's an example: Gemini, and this was positive, right? Something that occurred for about 8 hours, right? When all of this was going down and there was panic with SBF. Liquidity was thin on GUSD in certain places. And forgive the squeaky dog if you hear me. My little Pomeranian. You could buy GUSD on a decentralized exchange where there's a lot of liquidity on something called Curve, which is like a fundamental automated market maker exchange just for stablecoins originally. So you could buy a whole bunch there. And for a while, for like 6 hours on Gemini, GUSD was selling for like $1.75 a coin because people were flooding away from Tether, which is USTD, and some of these other stable coins because they believed USD was secure. And then a lot of money was flooding away from FTX into different ways that they could get it there. And so that caused a break in the liquidity to the upside on Gemini. And you could come in and you could sell $1 for $2, basically.
How do you find out about that stuff? Like, you know what I mean? Like,
you're like
I had a bunch
living
of
and staring at your phone all day.
What did you say?
you're staring at like crypto Twitter to watch everything because it's all happening instantaneously. So you have all these personalities, different anons, some of these VC guys, and they're all commentating live in the market, like kind of a troll box on on an exchange or a trading system. Like if you're from like on a Bloomberg terminal, right, where they have the little chat boxes on the Bloomberg terminal, but they're doing that on Twitter, and then they're also doing it in Discords, right? So they have all these sometimes private or open Discord chats where they're leaking alpha, sharing it in between. Sometimes they have paid gated communities. But yet you're basically just trying to dial into all of these data sources as it comes out. Because if you can react in an hour or to 30 minutes to what might happen in a news cycle 24 hours later, chances are you can save your ass or make a good bit of money.
That's so smart. Yeah, I wish I had didn't have to sleep and I could just matrix my brain to just collect that data all. You know what I mean? I used to do penny stock trading.
Yeah.
And I follow this Discord, this guy buy, sell, short. And I used to make 200-300% on trades. And then when the market crashed, penny stocks are shit now. And
well, that's what CT would say would be shit coins, right? So that's the Doge, that's the Shiba Inu, the Spank coin. There's 1,000 of them, right? If there's a congressional, there's a congressional
is that a coin?
Yeah.
Pump rocket. Yeah. There was a congressional testimony where I can't remember his name, but he's on the on one of the committees for banking, right? And he started talking about a mongoose in relation to, it's just this meme. And so within 5 minutes, somebody created a mongoose coin, put it on Uniswap, and it was mooning for 10,000%.
That's crazy. Yeah. Why aren't we doing that shit? Let's make.
Well, it's just
coins.
gambling. That's completely gambling, right? That's all that is. You might get lucky, you make a meme, it works, you can exit, you can pull all the liquidity and rug, and people do that.
Would you guys do that? Would you guys rug pull? Or would you guys be cool about making a coin?
For me, I got into crypto back in 2015, 2016. I had heard about it when I was in college, and then I was being a substitute teacher, so I had some time, in between classrooms. All the subs got a laptop, right? So I made a Poloniex and a Gemini account while I was a substitute teacher and was talking about this as a sub, right? So I kind of got into it because I really geek about the economics around it. I geek about the decentralization of it, the idea that, man, maybe we can do something better. We can take, not that we're going to fix everything, but we can take some of those gated opportunities. Up until Robinhood, if you weren't an accredited investor with $250,000 of family money or something, you could never touch any of these private equity seed rounds or deals or anything like that. Excuse me. Now you can get, I can get into seed rounds. I've been in seed rounds, right? You're capable of doing that, and you can also get involved in really cool actual building projects where there's a project called Dopex, which is on Arbitrum. It's a layer 2.
Dopex? D-O-P-E-X?
Yeah, Dopex, D-O-P-E-X. Right, it's got a bowl on it. But the whole idea is it's a perpetuals exchange, right, perps. And it offers these vaults where you can run, folks who have no idea about traditional finance, myself, can run advanced trader strategies like straddles and futures and do all of that. Or they can deposit their money and have somebody manage it for them, right, within that DEX.
This is like a crypto Robinhood in a way.
Yeah, so you could be long, you could be short, you could run an automated straddle trade, which is basically means you're long volatility, right? So if it goes up, you're going to win. If it goes down within a certain amount, you're going to win. But if it goes too far, you lose money. and all of it is just run by the smart contracts on Ethereum, right? So that's what I would say I'm really into is Ethereum and all of its related ecosystem coins.
What do you like about Ethereum? I'm so turned off by the gas fees.
I geeked out early on and got Ethereum because they said they had smart contracts, right? They were initially ICO'd in 2014. Man, I wish I was paying attention then, right? And I wish I had the money I had when I was working at TotalMed back right first at 2016 to put in, but I was a substitute teacher, right? But smart contracts was a huge breakthrough, Joe. It allowed, rather than having to depend on, your Gary the banker or, Susie the broker to make these trades for you and they collect their fee for doing so. You could code it, literally write it in computer code, and it would automate and it would take action based on all those if-then type statements in computer code, right? And you could bypass those middlemen. So when I heard smart contracts, I'm dreaming up like way back in the day, like, okay, what kind of improvements could that deliver for shipping, right? What could that do for it? And so, I just saw all the waste and all of the bureaucracy and just, the inefficiencies that are in regular corporate worlds, right? And if you can build something with the right incentives to automate it and find a fit, like they're talking about Elon right now on Twitter, right? Where he just cut out 85% of his workforce, right? And Twitter's still running, right? So now imagine, you kind of have that level of impact in traditionally really intensive industries where people are sitting and putting entries in Salesforce and all of that stuff, and have these transactions automated instead.
So you're saying that utilizing some sort of smart contract blockchain, you can eliminate. So what, you just like hire
so you
programmers
eliminate
instead
trust,
of adding like a shipping clerk, right, or something?
Yeah, right. So you don't need say we're making a bet, right? Really simple. We're making a bet on a sports betting, right? And you would have to put your money in with the bookie, right? And he'll settle the bet out, right? Who the winners get paid out on their bets whatever those parameters are met, and the losers lose their money to the winners, right? The smart contracts become bookie. No more bookie because it's all automated in these smart contracts. So they do all the settlement for you, right?
You would cut out all the middle people, which would save you fees, which would make it much cheaper in general to do business.
What is all of one of the biggest reasons Robinhood right now can offer 3.75% on their cash swept on your holdings on Robinhood, right? Well, they can offer that because they have a lot of automation and they don't have to pay all those middle manager salaries of JP Morgan, right? JP Morgan is doing the same thing Robinhood is doing. They're taking all of that, all of those deposits, and they're putting them into 6-month treasury bills right now, paying 4%. It's just Robinhood is giving you 3.75% of it back because they don't have the same overhead.
That's so fucking smart. That's that stuff that I grasp crypto to like a degree, and then the way you broke that down, like, okay, that makes so much sense. But in my like layman brain, I'm like, smart contract. That's interesting. And
then like the other big chunk of it early on, and originally there was only 4 cryptos I had, right, on Gemini. It was Bitcoin, as everybody knew it, right? Then Ethereum for smart contracts, right? And then I got Chainlink, and Chainlink appeared. And Chainlink is still this huge behemoth, right? And they run something called they run all the price oracles or the information oracles. So, and it's pretty heady and beyond me to explain all the detail of it, but their Chainlink sets and determines what the price is across all of these extraneous data points, from centralized exchanges like Kraken and Gemini to protocols like Curve on Ethereum mainnet.
Dude, I didn't know that. You know, I traded like a ton of Chainlink when it was worth like nothing for a bunch of Tron, which is like like a garbage crypto. My buddy was like, "Dude, you want to get some Tron?" I was like, "Yeah, I want some Tron." He's like, "Cool, send me some Chainlink." I was like, "Yeah, that's fine."
Well, you know, His Royal Highness Justin's son, that's the guy who's behind the whole thing. That's a whole other story.
Who is this?
Justin's son is so Tron started up as like another EVM compatible. So it was kind of it could interact like Ethereum could, right? And there was a bunch of other people building it at the same time, but he did some shady shit, basically whaled him, took over Tron, right, and then rode it to glory. And he's this billionaire, and now he has an ambassadorship of some country, I think, around the Bahamas, right, you know, or something like that. And so he's just totally immune to everything because of that ambassadorship, and now he can do whatever he wants. It's just wild. Yeah. So Tron he took all your money. You can blame Justin.
Which is a red flag. He's got a shady past, and then now he basically is protected to get away with whatever he wants. So, warning.
Yeah.
Steer
I mean,
clear.
to give you an idea, Joe, he's running something called USDD, which is just a Terra Luna clone that offers 20% APY, but it just
20?
hasn't collapsed yet. Yeah.
How much money should I put into that?
Don't.
Run.
Nothing I say is financial advice, but that's probably one that you should, stick with. Just don't. But that's a good point. There are crazy APYs, right? A lot of them are extractive. Most of them are not sustainable at all. And that's because they're farm tokens that are just meant to be sold. So you're seeing a number, 250% APY, 10,000% APY. That's based on today's prices extended out a year, right? The price is going to go to the floor to zero within maybe hours or days' time.
Does anyone make money off of that other than the token owner?
The early adopters.
The insiders.
Yeah.
Right. So if that's why people are hunting around in those little, and it's gotten hard because 2 years ago, it was a much flatter field, and now you have these different levels of inside relationships where if you're not early in before the pump, right, you just forget it, right? There was one called Titanium that came out 2 weeks ago over the holidays, and it's a total Ponzi mechanics. I looked through it, I'm like, okay, this is a Ponzi game, but I'll play, right? And I think I put like $450 in, and I could get $50 out, right? There's definitely people along the way though that made like $25,000 off a $500 entry, right? But it's zero sum extractive, right? So the point,
you got to get in, make a little bit of dough, and then
get in, get out.
Get out.
Yep.
Yeah, don't get
at a
greedy.
really shitty bar or something, man. Get in.
That's what
out.
I did with Terra. I was like, and it was so freaking hard to get money into, like, US. What was it? USDC, US.
Yeah, USDC,
USDT.
Okay.
And then you'd have to transfer it. And then I'm one of those like Astroport, and then there was another one, and I can't think of the name of it. But I was like, man, I was dabbling. I thought I was like a crypto genius. I had like 86% APY at one point. I was like, I'm fucking rich, putting all my money in here.
Yeah. Well, and that's the takeaway, Joe, is like the risk-free rate right now has been going up as the Fed's been increasing interest rates, right? And its risk-free rate, like I said, is around 4.5% on 6-month treasuries right now. So if you see interest rates that are far and above, right, 2 or 3 times that, the liquidity is coming from somewhere, and it's not going to last forever, right? So you got to figure out where is that coming from, and if you can't figure it out, chances are you're the exit liquidity. You're the one who's going to get out. Right? So I don't like my net average APY I get is somewhere around like 6 to 7% right now, right? And has been since probably around November, January of last year. I didn't exit right at the top at November, right? But I exited like January, most of my funds January 1st of 2022. And I
Do you think Gemini
Nice.
will regain earn liquidity? Because that was like my freaking savings, man. I was like,
Oh,
I mean,
man.
it's
Oh,
not
I'm
gone,
so
but I'm like, it
sorry.
was so nice having that like 8% APY savings account, right? I was like,
Yeah.
oh, this is the hack of all hacks.
So I don't know. Nobody really knows unless you're Barry from DCG right now, who's the parent company of Genesis Capital, right? But that actually ties all the way back to Terra Luna, Joe. That when Terra Luna blew up 3AC was on the premium trade on something called GBTC. GBTC is a trust that trades on Robinhood, right? And for a very long time, because it was, people like you just said, don't want to dive all the way into crypto or don't want to custody their own coins, and they had traditional brokers, and it was available for retirement funds. Folks could buy GBTC, like the equivalent of Bitcoin, but because that was the only way they could do it, had like a 30 or 40% premium over regular Bitcoin. So 3AC worked with Genesis Capital, and they got a loan from Genesis Capital, right, off of whatever shitcoins or Ethereum, whatever they had. They got a loan, okay? They took that loan and used it to buy Bitcoin, right? And then they were an approved creator of those shares of GBTC. So then they would use their Bitcoin that they got from borrowing from Genesis, right, to go create GBTC, right, which was trading at a 40% premium. They would then take that GBTC, sell it, because they just got a 40% profit on it, and use it to go buy more Bitcoin. And they hypothecated all the, just like that, right? And so eventually, early this year, right, late December, if you look at GBTC now it trades at the total opposite end. And this is one of been the pressures that has caused these liquidations and bankrupts. It's now at a 40% discount, right? So when all of that happened, right, SBF, because it was borrowing from, like, SBF and FTX should have blown up right when 3AC did, just a couple of weeks after Terra Luna went. But because they were using customer funds with backdoors and loading it back to Alameda Research, they were able to, on the books, cook the books, and looks like they appeared to save all these folks, right? But eventually, what happened was CZ, which I can't pronounce his name, but he's the head
Binance
of Binance
CEO. Mm-hmm.
Yeah, Binance CEO. He was the original. They were the original first seed round funders of FTX for like $500 million, and they had exited most of their position, but they still had some left in a token coin called FTT, which FTT was just a Ponzi coin, really, basically. But you could use it on FTX to get a discount on your trading fees, right? So it had some amount of utility, right? And so they allowed Alameda to use that FTT as collateral for all of these other stable coins, Ethereum and Bitcoin. So they had their own coin, which they controlled 70, 80% of it, right? And they were in a very illiquid pool, trading at like $22, and they said they would defend the price. Well, CZ said they had some idea that something was going on, right? I can't say for sure, but he wanted out, he tweeted about it, and it started some of the scare. And then they said they would defend it at $22. We'll buy all you want, right? Well, they tried. But at that point, as the price continued to drop, they were getting margin called. But they had no funds because they had lost it all. And all of their collateral was rapidly losing value. So what was fully collateralized, right, by FTT, when it went from $22 to $2, they're totally insolvent, right? And
that's
that was
crazy.
their collapse. Yeah. So
a lot of that
I think
too,
what kicked that off was their balance sheet got leaked, right?
Yeah.
And CZ was like the first one to be like, we better dump our holdings. And he, I believe, was able to get out, and then it started the cascade.
Which is ironic because it's CoinDesk that leaked it. And CoinDesk is one of the sister companies, the media arm of DCG, right, along with Genesis Capital.
And Genesis is also getting like wrecked because of all this.
Yeah. Genesis, the big difference between Gemini Earn and FTX is FTT, right? Is Gemini Earn discloses at least that you could lose all your funds when you put it into the Earn because you're giving it up to Genesis Run, right? I don't think that all your funds are totally screwed, Joe. By the way, there is a likelihood, I would say, that you're probably going to get a haircut, right? Potentially, depending how it goes. Gemini could step in with some of their funds, and because they have an interest in maintaining their look and their exchange, right? It'll look really bad on them if their Earn program fails. People have to take a haircut or lose out. So there's that, right? The other thing is that this whole GBTC thing that I was talking about is a huge cash cow for DCG, right? Huge cash cow because unlike most like ETFs typically carry like a 0.02% fee structure with them. Well, they're charging 2%, right? They get like $200 to $500 million a year, depending on bull or bear, coming
just
in
managing
just from
a
fees.
crypto ETF essentially.
Yeah, with very little work at this point, right? So they get so much of that run rate that, it's unlikely that they're going to go, if they go bankrupt. Before they go bankrupt, that means they also own a whole crap ton of those GBTC shares. So they would probably sell that and liquidate that, which would put a lot of downward pressure on Bitcoin, which would stink, right? And then they would use that to pay back Genesis and Genesis to free up, right? The other thing that they could do is they could get acquired. And we're still waiting for this news to finish. So whatever this news is going to have a market factor and a likelihood on you having redemptions opened up again. And that's a company like Fidelity, right? Where Fidelity manages trillions of dollars, right? And could really push a whole lot more capital into and it's not just GBTC that runs that way. There's ones for Ethereum. There's ones for like 5 or 6 different of these majors, right? And so if they acquire it, right, they'll buy up the liability because that's such a cash cow. And a 2% management fee when you're managing, multi-billions of dollars, right? It's pretty straightforward for them. And right now, granted, Elizabeth Warren, a couple others are trying to push back on it, but Fidelity is still looking to move forward in terms of making all of these major cryptocurrencies available to the funds that they manage.
Really?
Yeah.
I'll make a note on that.
Yeah.
Well, I think what we were waiting for is that like mass adoption. Like if something like Fidelity comes in and says, "Hey, this is a safe," that I think like my dad would be like, "Okay, crypto's safe." Like those are the people that we need to buy in, and then have these major exchanges be easy to access, Coinbase stuff like that, right? Or
well, that's where
Fidelity,
SPF
sure,
is
add
so
some Bitcoin to my
damaging,
portfolio. But
right?
What's that?
That's where SPF, right, and this FTX stuff is so damaging because it really can disrupt a lot of that comfort. And to be fact, he was a huge donator, right? But not just to one side of the aisle. This is something that came out literally today.
Both
right?
sides.
Both sides. He very much played the social game. So he knew that, like, okay, if I donate to Democrats openly, right, that's going to help play the as he used the word shibboleth, right, but using the right words, sending the right signals, the virtue signal, things like that, right? Well, it turns out that through some of his parents, mind you, his parents both worked at Stanford, right? Through his parents' 401(c)(3)s, or these dark packs, were able to fund enough funds to where he was actually the second or third this year for Republican donations as well.
Holy shit.
So he's getting treated so well by the media and all that because he's put the money into all the different places that he needed to.
That's why he's still walking around and not arrested and still a guest speaker in New York at, I forget what that event is that they're having next week.
It's wild.
That's crazy.
It's wild.
Dude, Cam, I know you had a bunch of questions and you're even more knowledgeable about me in this space. Do you want to toss a couple of those out there?
I was curious, Matt, what your thanks, Joe. Your opinion of Tether is, because from the stuff I've read, Tether's very similar as far as not being backed by anything, and it's like there's a big correlation between the price of Bitcoin that's been going up recently in the last 2 years with the bull run. Every time Tether would print, it was used to then buy Bitcoin, and Bitcoin's price would go up a lot, and Tether hasn't printed it, I think, since July, and we've seen what's been happening to the price of Bitcoin. So I was just kind of curious your thoughts on that, and if you feel like if that implodes, that's really going to wreck the market.
If Tether implodes, we're like,
it's like nuclear.
just go cry somewhere, man. Like it's over, right? Because that's the only thing I can imagine being of scale that would be worse than FTX right now, or like a Coinbase or a Binance fan, right? I will say I'll let my wallet speak for itself. I hold no Tether, right? I don't actively do the FUD game or anything of that. It's just I look at the risk profiles of the stables that are out there. I understand that there's censorship risk in both Tether and USDC. Literally, if they wanted to, and this happened with Tornado Cash and some of these other mixing protocols or privacy protocols, both USDC and Tether can freeze your address if you have coins in it on chain. So say I had $500,000 in Tether or USDC that I just rugged from some protocol, right, or stole, whatever. Tether, they can stop it, lock it up, right, and freeze it. So that's the custodial risk. Between those two, I trust the audits of Circle and Jeremy, whatever his name is, Terra or something, for USDC more than I do for Tether, right? And I think in terms of like government supporting and backing, Jeremy Allaire was right there with SBF and some of those other big names at a number of congressional hearings this last year. I think if the U.S. goes the route of having one of these centralized currencies, or CBDC, as they say, right, USDC will essentially take foot and become that, right? So I hedge with that. I hedge with DAI, right, which is a couple levels extrapolated. It's a stable coin based on USDC, but Ether and a number of others, and then some real world collaterals. And then I also hedge with Frax and LUSD. And Frax is a partially algorithmic coin, but it's like 97% USDC. But they've got a lot going on. They're a protocol that's taken the route of, they've made their own stable coin. They have their own lending protocol. They have their own automated market operators. They're heavily integrated with Curve. And they have their own bridge, right? And so by putting together all of these different kind of key pieces, they've created a moat or an ecosystem around themselves, right? And I'm willing to take right now at most a 7% haircut if something went terribly, terribly, terribly wrong, the worst I would lose would be I'd lose 7 cents on the dollar, right? And for me, those farms that I'm doing right now get anywhere from 7 to 12% because they have exposure to fracs. Right?
That's good. That's pretty low risk. So
yeah, I mean, in terms
really
of crypto degens, I'm like really low key,
about as safe as you can get.
Yeah, you got to survive in these markets. But yeah, for Tether, that's how I kind of view it. Do I believe in all of the FUD? Not necessarily. I think years ago they probably did have crazy exposure to some corporate bonds and Chinese real estate and things like that. I think they just shifted a lot of that. We could see some peg issues with them, and we have had in the last 6 months with all this going on, but they managed to honor redemptions in billions of dollars. Good old Justin Sun put like $10 billion of redemptions through. And it's just a trade that folks that have those accounts have access to, right? We can't redeem directly for US dollars through Tether, right? But these big whales and larger protocols or very early traders who are connected can. So when Tether from fear or whatever in the markets depegs to 98 cents or 97 cents, they'll come in and arbitrage it back up because there's just a small group of them relatively to the rest of the market that can do that arbitrage because they're the only ones that are proof to redeem, right? Same thing with Circle. We just don't see like the ones that can redeem Circle's USDC is Kraken and Coinbase, right? Coinbase is unique, and they're integrated, so they want to succeed together because Coinbase, unlike regular USDC holders, because they hold so much USDC on Coinbase, Coinbase gets a native yield from Circle in the form of the yield that's coming from those treasuries. It's a big business being a stable because you got a couple $billions of assets under management. And as these interest rates rise, they're getting 4% and keeping all of it.
I didn't realize.
Why do people hold money in stable coins? I never understood that. How do you make money off of that?
Well, there's a variety of reasons, right? If you're not from places like us, when your native currency inflates 40 or 50% over the year, like the lira does, right? Or, in third world nations and in South America and places like that, right? Getting a hold of a stable coin, which represents the stability of the US dollar, right? They don't get 10%, 15% inflation. That's nothing. That's great.
Oh, so
right?
That's a really good way to short your own native currency, essentially.
Even like in Europe, right now with the euro, with what's been going on, where it dropped from a premium to then it was below parity, and I haven't checked lately because don't pay attention that much, but they're around parity or just above, right? Folks could have traded from euro when it was at 1.4 or 1.6, right, and got into USDC or USDT, Tether, whatever, any of these, and saved themselves a 40% drawdown in their native currency. Right?
That's okay. That's awesome.
So people, crypto's just gambling, blah, blah, blah. The one thing it actually really did well was figuring out these stable coins because it actually makes the US's ability to be a reserve currency even stronger. And that's one of the arguments for having some strength in USDC or some trust in it is that, if you think Pax Americana is going to last, right, the hegemony of the US is the reserve currency, right, them adopting a stable coin and getting it out into these markets will add so much more of a moat than we have already today.
That's so freaking smart.
Yeah, it's wild. It's wild.
I wanted to change gears. Cam, go ahead. Sorry.
No, we can change gears. I was just curious real quick, Matt, too. I didn't know one of our other episodes when we were talking about mindset, we're talking about setting a plan ahead of time, take emotion out of when it comes time, the levels you want to sell at. I was just curious. Obviously, you know, don't share like any personal information, but as far as your mindset, like, did you have a plan ahead of time to take the emotion out of it? Like, hey, when I hit these price points, like I know I'm going to sell these percentages or whatnot.
I would say in hindsight, if I had done it more, I would have exited much more cleanly. What got me out was I followed a number of these guys, but one in particular is this guy Pentoshi, which is just he has a big penguin anime avatar, but he's been around in the place, and at some point he got himself a mentor in a big traditional bank, right? And so he was signing off all the signals and warnings around October, around macro, about what could happen with the reserve as interest rates rose to combat inflation, and what that meant for risk on assets. And I had an econ minor, and so I could pick up and distill just enough of that to be like, I get what you're saying, right? You know, if we have a higher interest rate, you know, there's going to be less appetite for risk, right? People are going to, so on and so forth, what we saw. So that's when I started taking major profits and exiting positions. I held a majority of my ETH down the whole way because it was like a ride or die type bag, right? But I'd say I got 80% of my total net worth into stable coins between November and January, into January 2022. And that was just from seeing that shifting macro perspective and looking back and looking at it like, oh man, I've had a shift in terms of what my wealth can do for me. You know, I'm in a position now where do I still have to work? Of course, right? But I can take the time and find work that's really motivating and interesting and curious, right? And versus just working to make money to stack, right? And so because I had that shift, I'm like, all right, I got to lock in that change. And that's that thread I had sent you, Joe, from that Punk 6529 character.
Dude, and that's the perfect, because that's literally the segue I wanted to turn into is, can you explain like those, is it the 5 levels and kind of?
Yeah. No, so what he says, level 1 is like just lottery of birth, right? You grow up in South America or South Africa, right? And your skin's a certain color, right? Or you were born a slave, or right, you're whatever may have you, right? Maybe you're in the favelas or something, right? You got to do anything you can to get out of that level, right? And that's like 70% of our world, right? Is that kind of situation, right? In different parts of the country, right? Maybe you're born in China, but you're not the right religion in China, right? And they got you in a concentration camp. Like, you're screwed, basically, right? That's level 1. Most people don't get out of level 1. They're stuck, right? If you can, level 2 is where you are. That's what we might maybe call our ultra low working class. It's the mom who's working 3 or 4 different jobs, right? Plus has her kids, right? Part-time jobs, scraping by, constantly worried about money, constantly worried, like all of the stress of just being able to get by, right? Is level 2, right? Level 3,
like just surviving.
You're just surviving,
level 2,
right? You're in. Hey, great, but you made it. You know, you immigrated, right? Maybe you made it to to Europe from somewhere else, or you made it, right? You have a higher degree of safety, no questions asked, versus somebody in level 1, right? And you do all you can to get from level 2 to something like level 3. And level 3 is what I think most of us would call middle class, right, in the U.S. But middle class meaning you could be in Silicon Valley making $250,000 a year. It's just, all of it goes into the cost of living in that area, right? Or you could be in, the middle of nowhere making $45,000 a year, but all your bills are paid, right? I look at my brother in Ohio. He's level 3, working at First Solar, but he got a 2% mortgage locked in 2020 when he refinanced. He took 10 years off. Nice, not a cushy job, but he enjoys it, and he's got a heck of a social life. He's doing well. He'll be fine, right? Level 3, right? Level 4 is the trap. Level 4 is like the guys that have to keep up with the Joneses for the rest of their life, right? It's where they get to a point where they have more than all of those needs in level 3. Like there's no question you can pay for all your kids' college. There's no question you can pay for, anything that you necessarily desire in the short term, but you just keep on desiring. There's always something that you're trying to put in to avoid somewhere to make you feel good. You're stuck on dopamine loops, right? You're a dopamine addict of one kind or another, whether it's spending stupid amounts of money on digital items in a video game, going to casinos, or taking that third, not feeling satisfied as you ride first class or on your private jet, right? Most people who get to level 4 probably stay there, right? Or they drop back down into level 3 because their desires outpace their ability to their run rate with the income that they're generating, right? Level 5 is like what we would call like Maslow's self-actualization type, right? That's where your funds, your run rate, whatever you have it, you have balanced out and lowered those desires, or you've seen enough to where you can begin to fulfill this sense of purpose and peace and fill that void by realizing there was never a void there in the first place, right? So that can be somebody who is like William Buffett, right? Who he's level 5. Yeah, he has crap tons of money, but he still owns that first house. He loves what he does. There's no question about it, right? Or it can be that guy who got his, while he was level 4, he decided to put solar on his roof. He got a water catchment system. He's got a truck and all the tools to do all the repair that he wants. And he's like totally self-sufficient, right? And he's got a lively social or community around him, right? He's making 50 grand a year, but he's got 40 grand a year from his investments that churn, right? And that's enough to fulfill his needs, right? So that's where I'd say I'm aspiring to, is I never really played the level 4 life all that much, but I can skip it in a sense that, I could find myself pretty darn happy just by growing green beans and pickling them and selling them at the farm stand with my own art, right? That would be really awesome.
Is level 5, is one of the key components of level 5 related to having enough passive income to support whatever lifestyle you choose? Or is it whatever you're doing supports your lifestyle
it's both.
And you're happy?
It's both, because it's like, for some people, the lifestyle they choose, they're going to need a big passive income because they have a bunch of kids and they want to travel to every nation in Europe and do all of those things, and they have enough run rate to support it, right? Or it's also the person who just truly has found their passion, right? But their passion pays shit, right? When we think about that ikigai, Joe, which I've talked about before, which is it's that graph of the different things, the thing that they love to do, the thing that they're good at, and the thing that people value them for just doesn't make any money, but they have run rate to fill that gap, Right. So when I look at a level 5, it's somebody who's figured out that ikigai thing one way or another, and they've compensated for a missing portion of it, which is often the money piece by previous achievements.
Yeah, my brother he does like the like when there's California wildfires, stuff like that. And he's like, they don't pay very well. He's like, he doesn't even care about like having the internet. I mean, he has the internet, but like, he's just happy. He loves what he does. And like, I do pretty well. And I'm like, that void I'm trying to fill. I'm worried that I'll have to go through level 4 to get to level 5. Not really worried. I feel like that's probably part of that journey, but I would love to be able to just blow right through it and just get to 5.
Well, like my level 4 period for me, Joe, was like taking 6 months off and driving around with my wife with the rooftop tent on our car and seeing all the national parks, right?
That's so cool.
You say like doing that to most middle-class Americans, and they're like, oh my gosh, I wish I could have done that when I was young. Right? Now I'm too old and I can't get around, or I don't have the body for it, or things like that.
It's the trap, right? Like I can't not do X, Y, Z to support this life I've created for 6 months.
Yeah. Yeah. And, you know, I'd say for me, my dad passed a couple of years ago, but he passed just 2 or 3 years after he retired. Right. So what was supposed to be this big, well-earned, golden age type thing didn't happen for him. Right. So that shook me.
Damn.
Not all at once, but.
So you're like, dude, I got to enjoy this shit. Yeah. That talk about like, you know, what are they, mortality through osmosis.
Yeah. Yeah. So that was, I guess, would be part of my 4th stage. And I'll have stages where I go back. Right. You know, and I talked to you before the podcast, like sometimes I get bored from the painting, or, you know, it hasn't really settled on what that passion is to get me to that level 5 idea yet. I'm still finding it, still looking for it. Right. And so maybe if I've stumbled around, I haven't found it yet, I'll have it creep up on me like, all right, I need to go bust it and make bank. Right. And get some cash coming in. Right. Because I want to be able to justify that next 6 months or that next, right. The retirement's secured,
that's that 4-hour work
between
week,
now and actually hitting 60, right? You can't burn in through all of that, right? So yeah, it's just, you know, good budgeting, and can you find a job that's curious, that you enjoy? So I joke around all the time. I'm like, down here where I'm at in Texas, I'm like, it'd be cool to work at a hemp farm. That would be fun. They're doing like there's ones that do building materials. Right. So they're making rebar out of hemp and things like that. But then the next day I'm like, yeah, maybe I could go back and substitute teach. Like they need teachers down here. Right. They need teachers everywhere. Right. I would have never, and I used to substitute teach, but I didn't have the money at the time. And I really enjoyed it, but it wasn't going to get me where I wanted to go long term. Right. Now I could go back to it and enjoy it because it fills out those 3 different pieces of the ikigai for me. And the money's coming from
And you
somewhere
set
else.
yourself up in a position to have that luxury where it would push you a little bit more in that income world. But whereas if you had not set yourself up, it would be like a level 2, level 3 area.
Yeah. Well, and it's just, Joe Rogan talks about it, like when he moved into his new house. Right? It's like after a while, house is just a house. You like the special, the dopamine falls away, and you're still looking for that next thing. So it's like, how can you find those things that push those buttons without having to accumulate, you know, this next asset that you value more than anybody else, that you can't sell, that's illiquid, you can't get rid of, right? So for me, it's like, okay, how can I have some of those experiences, but balance it out against, you know, this longer term runway of being able to continuously have those experiences. So I'm willing to have the trade-off of, you know, okay, we'll take 2 weeks and we'll go go to a new national park. We're going to see different things we haven't seen, right? I don't necessarily need to do the 5-star. I don't need to keep up on Instagram, right, or TikTok or any of that stuff or all of it. So.
What is your favorite national park that you've visited so far?
Oh, man.
I know it's a hard question.
So I'd say 2, right? I've got pictures of driving through Idaho into the Grand Tetons that are just wild, right? Grand Tetons were just so, I don't have words for it. Incredible, right? And then I have Bryce Canyon as well. Bryce Canyon in Utah, one of my absolute favorites. So that's one of those things that, like for me, my level 5 activity, when I actually fill the circle and close the circle with it, I go out, I travel, I get to see those sunsets, I draw them, right? And then either I sell those sunsets or those photos as cheap NFTs, or I use them as marketing material and put them on labels for those pickled green beans I want to sell at the farm stand. Or if I do well, like, and I get enough brand awareness, I can sell some of those goofy sunsets to Pier 1 imports or whatever, where they'll make 10,000 of them and sell them to different stores, right? I really enjoy doing the thing, and the thing that I really enjoy doing gives me a return. So we haven't filled
That's
that
fucking
yet.
awesome. That's so cool.
You know how cool it would be to be like my art doesn't, yeah, it'd be great if it was a gallery or something like that, but my art made it into Pier 1 imports, right? Heck yeah.
I'm imagining like the pillows that they saw with like the fancy like kind of like Moroccan beads on them with the sunset on it.
Yeah, basically.
Maybe it's got the sequin where you can like go one way and it's like night,
Oh,
and
yeah.
the other way, and then it's like the daytime.
My target
That'd be a double. 'Cause
demographic.
you could sell two pieces out right there.
My target demographic is definitely hashtag van life. No questions asked.
Dude, we were
One or
with the
two
guy who
pillows a
quit
van.
his job and made a van. His wife was a travel nurse, and they had a kid, and he said, "You know what? I'm working too much. I want to spend time with my family."
Yeah.
They sold their house. They made one of those vans, and they just been like going. So it's pretty cool.
Yeah,
And that's like his level 5, right?
yeah.
My brother's
You know,
big
if
into
I
that.
wasn't
He
married,
built his own van.
If I wasn't
Your brother
married,
built a
I'd
van?
probably be in the band. So
Yeah, he's really into kiteboarding, so that's kind of like his getaway for the weekends. His time away from the wife and kids is takes his van that he spent probably 6-7 months like retrofitting the whole inside on his own and goes kiting.
It's smart too because you can just go park in like a Walmart parking lot because it just looks innocuous and not.
Yeah,
Innocuous.
In yeah. Words.
It's like a 15-passenger van, like a Ford, and I told him, I was like, dude, you can just go on Vistaprint and order magnets and just create some fake like airport transport signage and just slap those magnets on the side so when you park place overnight, like people don't mess with you, think you're overnight camping. They just think it's like some passenger transport van, just
Or
parked
like
there.
a Korean church, like those vans that they like bus
Perfect.
to church. It's actually the airport idea is actually really smart. Just slap like a magnet on there. Mm-hmm. We're at our hour mark here. Matt, this was awesome. By the way, I really appreciate you.
Oh, my
coming on.
pleasure, guys.
Any final words for the viewers, or anything you want to plug?
Well, I'll say 2 things. Nothing to plug, right? The pickled green beans aren't out yet, right? When they do come, I'll let you know. But 2 things, right? If you're looking at crypto, for most people, the smartest thing they can do is buy a little bit out of each paycheck and never look back at it. Like, right? Just buy it and forget, right? Because with the hope that the adoption long term is going to scale you up, right? If I did that with every paycheck, right, from when I first started working, and not just when I was thinking about it, I'd be way better off than I am now. Even with anything else that I did successfully in the last year or two, right? And number 2, if crypto isn't for you, that's fine, right? Totally. just know that you can get 4% right now on a 6-month U.S. Treasury. And if you don't have a broker relationship, do that with your bank, you can get 3.75% on Robinhood, right? There are so many folks that are just, sitting with cash in checking accounts at the bank or wherever, right? If you're a person who trusts the bank to hold your money, you might as well get 3.75% on Robinhood because it's FDIC insured. So that's what I got.
Actually really happy you mentioned that because I have money burning a hole in my checking account because I'm like trying to time the market, but that makes so much more sense. At least you're beating inflation and making a little bit of a return.
Well, you're probably not beating inflation, but you're cutting it in half.
You're limiting the loss you're taking. Yeah.
Yeah, exactly. Hedging it, right?
Well, it feels like you're winning because the number still goes up. So
right, yeah, that's the most important thing. That's an awesome tip. Cam, any final words?
I just want to say thanks, Matt. Again, we appreciate you coming on. It's nice to have another voice, and especially, you're very knowledgeable and experienced in the crypto market. So it's great to have that perspective. I would just add, keep your keys like in a wallet if you can, especially a cold wallet. That's the biggest thing. Like a lot of the people with FTX and these other problems that have happened is the exchanges get hacked and things like that. They can take your money at any time and you don't have control over it. But if you can just put it in a wallet,
get yourself a ledger.
Yeah,
not your keys, not your coins, old stuff.
Yeah, right, that's what I told Joe. I was like, you got to get a Nano. Check it out. There you go.
All right, there you go.
That's Joe. My ledger.
Good.
Your little baby one.
Good.
What about you, Joe? You have any words of advice?
Dude, honestly, I thought I knew about crypto a little, and this is I've been taking notes this whole time, and I'm going to look into some of this stuff. I didn't know Chainlink was actually used to create the pricing, which makes me feel like it's so much more valuable and reliable than I thought it was before. And I want to check out Frax. That sounded cool and interesting. But my biggest takeaway, I don't even know. I just think it was cool, man. I'm stoked that you're our first guest. This could have literally been a 3-hour podcast with all the information that I wanted to pull out of your brain. So I'd love to have you on again.
Yeah, anytime, guys. I'm happy to share the gamma for grandma at this point, right? Not much alpha anymore, but save it for the masses.
You say the gamma for grandma?
Yeah, that's all it takes. A little bit of gamma for grandma, man. So she can make it too.
I love it. Well, cool. Make sure you guys like the video, subscribe. If you have any questions, please leave them in the comments. And cool. Everyone take care. And thanks so much again, Matt.
All right. You guys take care. Be well.